Uh, Thank you, Steve. And first, let me start by thanking you all for taking some time out of your lives and spending it with us, getting to know us and us getting to know you. I don't think any of us can say it often enough that we thank you for your business and your support. And I think we're passionate about earning that support and your business every day. Marshall and I, this is interesting. You know, it's the first time Marshall and I have ever sat on the same side. For 40 years, I wanted to kill him. I only occasionally succeeded, but I think maybe I got more wounds than he did. So I'm kind of humbled by it.
No, we were just survivors.
You're survivors.
It's a period of time.
All right. Well, I also want to thank all the sponsors and for their support of this conference, and certainly those of our strategic suppliers for being good partners with us. We have but an hour, and it's a little dangerous actually to put two seasoned vets on at the end of the day with kind of like a pretty broad scope of what they want to do. Although that's the way I describe us. Someone before I came up said, "You mean two older guys?" I didn't take that personally.
You should.
No. But what we want to do is really talk about why COR Clearing. I know I was asked that question last night at dinner. Speaking with some of you during the day, I was asked that question. And I thought it would be an interesting dialogue. But I thought we could do that in maybe 15 minutes or so, give or take. And then really what we wanted to do is have a dialogue. Your questions, your thoughts, your suggestions. Ask some questions. I'm sure we can answer some, but probably not all. But it's a dialogue because this is, in fact, a relationship. So why COR Clearing? You know, we have a new name. We've introduced a number of new people into the organization, added them to a lot of seasoned professionals at the company. You've heard in the last 24 hours about a number of changes in terms of systems, in terms of processes, and that's all cool, you know, but so what? I mean, at the end of the day, the question still is, why COR Clearing? And the way I answer that, and Marshall, I think, will have a slightly different answer because we come from slightly different backgrounds, but we ended up in the same place. The way I answer that is, quite frankly, is why COR Clearing? It starts with people. And as a matter of fact, it ends with people. That's a pretty simplistic, short answer, why COR Clearing? But the fact is, and I think Peter Gruber caught the essence of it this morning. It wasn't lost on me when he said, relationships trump transactions. And I'm a relationship person, so that was music to my ears. And so it's about people for me, and my answer. And from the board members at COR Securities, right on down through the management and all the associates at COR Clearing, we share a common bond. It's a common philosophy. You can think about it as a guiding principle, if you will. But it's a singular philosophy, and I think it's expressed quite clearly right there. We're focused on your success. And if I had a marker, I probably would underline your at least twice, maybe more. But that makes it different. That makes it a relationship. We understand. We get it. You're the customer. We provide services, the clearing services that you need, but we have to recognize that you are the customer. You have initiatives, you have strategies. We have to be flexible enough and be prepared enough to assist you in those, in implementing those for the further growth of your business when you need it. We get it. It's not about COR Clearing. This is about you. We understand if you're healthy and you're vibrant, the odds are so will we. And that's good for both of us. The business itself, and I hate to kind of jump on a word called COR, But there are core elements that I think you look to us for, and I kind of put them in 5 buckets. And they may not be terribly all-inclusive. There might be a 6th out there, but I actually just put them in 5. And the first one is really processing and settling your and your customers' transactions. The second is reporting, confirms, statements, tax reporting, performance reporting, proxy notices, you name it. The third is providing a compliant process that's in place and supportive to make sure we meet all the regulatory requirements. And the fourth is to offer a fair and value pricing model. And let's face it, I understand, I know Marshall does too, that unless you see value and your customers see value in what we do, pricing at any point would be an impediment. So we understand that. And then the 5th one is service. Started with people, end with people. And service has got more to do with fundamental, functional, everyday, responsive, consistent, professional service every day. So our expectation, our underlying philosophy, and I can tell you Marshall and I have been passionate about this for a lot of years. I can also assure you, and you've touched a lot of the people from COR, you're probably getting that sense that there's a lot of passion in these folks. But our passion is to make sure that those 5 cornerstones are in fact delivered every day. That's our mission. That's simple, every day. Another way to explain that is, just about every morning during the week, certainly also on the weekends, you get up, you want to go somewhere, you pop downstairs, you take out your ignition key, you put it in the car, you turn it to the right. What's your expectation? You turn it to the right. What's your expectation? Start it, right? Not some of the time, not most of the time, every time. That's your expectation. But we've all been around long enough. We also know that nothing is 100% and nothing is perfect. So what happens when it doesn't start? You know those cushy seats you're sitting in the car and all those graphics on the dashboard? All that stuff that were the options that kind of was the sex part of the buy of the car? They don't really mean very much because they can't do anything. And maybe the most important button you've got in the car is something like OnStar or your cell phone. So what happens? You make the call because you need service. And that's people again. Responsive, professional, corrective. That's what you expect from us. That's what our mission is to do. If we can meet that bar, then I think all of you will allow us to expand our relationship, to begin to talk about additional services, products, things, whether it be marketing, direct or indirect, whether it be financing, whether it be products, whether it be research. But if that ignition key turns to the right and you don't get what you expect for the basic fundamental services you're paying for, you and I can never have that conversation on a long-term basis. Marshall?
Well, first of all, let me say, I don't have a written thing here. I'm come from the old school on Wall Street, and that is, I believe very strongly in everything that he just said, but it's not going to be beneficial to anybody unless you do business. And in the old days at Bear Stearns, when we first started the clearing business there, which was a long time ago, the theory was we had product in-house that we could then share with the smaller brokerage firms that were clearing with us. And in all due respect, we didn't have, at that moment, the greatest back office, the greatest IT. There was no IT, by the way, in those days. But we didn't have a lot of that stuff, and we built it as we went along. But as importantly, we built a sensational group of brokers, hedge funds, et cetera, that cleared with us for years. Now, I left the firm in 1990, so I can't give you the history after that, but I can tell you that as I was sitting here and listening, and we had some great speakers and you had some great presentations. The thing that kind of gets to me is the industry that you are in is changing. And one of the reasons St. Cloud is invested and starting to look at this industry very, very, very closely is there is going to be, in my humble judgment, a little bit of a revolutionary thing that takes place. Let's just put it where it belongs. Major firms don't want retail brokers. Is that fair? Does anybody disagree with that? They don't want to do transactions. They don't want it. They want to distribute their own in-house product. They want wrap accounts, and they want a fee-based business, not a commission-based business. In my judgment, and in St. Cloud's judgment, the future of this industry is going to start to, the pendulum is going to swing. The swing is people do not call up and buy stocks or bonds. They get sold stocks and bonds. They don't call up and buy product. They get sold product. So the retail broker, and by the way, retail is a very misused term. Retail is now, I mean, there are major brokers doing millions and millions of dollars worth of commission business that are covering what you would call high net worth accounts, small institutions. That is going to return, and again, this is a judgment, and you can all agree or disagree. That is coming back. So what really is going to happen here is, for instance, the 4 speakers that were just sitting up here, there were 4 great stories. Now, I told Steve, where are you, Steve? You here? You probably left. I told Steve Sugarman, if I was running COR, I would think about putting an internal group of people together to help these guys package and sell to the brokerage firms a product. You have a PAC trust at a 7.5% preferred, 3 years. Every retail client, the guy's mother that was talking about 1% or what, they have 7.5%, 3-year piece of paper, and a bank that's very well respected. I mean, why doesn't retail buy that? Why doesn't the clearing firms of COR be allowed to participate in that type of offering? Now, I don't know what the legalities are. Oh, I don't know if there's, but the issues are the product, the creation of a product, and the help that a COR can give to their correspondents on the marketing and the starting of how that process will work could be very beneficial. Now, I can tell you, and I'll mention a competitor, Fidelity, who clears, as you all know. The only thing that Fidelity really wants you to buy from them is their in-house packaged product. This is not a packaged thing that can happen here. These are individual. You might have customers who like biotech. This guy that was up here, he's a pretty smart guy. And I think he's got a track record of making a lot of money for a lot of people. Now, I'm sitting there as just an individual, and I'm looking at him, and I'm saying, I'd like to buy that. I'd play, if there was a way that I could play that, I would be involved. So my whole point here is, right now, COR is, in our opinion, I'm talking for St. Cloud, a real core investment in a changing atmosphere within the industry. And the other thing that's very interesting to me is, I can remember I ran a lot of the offices for Bear Stearns, and every day a retail broker would come in and fight about what kind of commission he got paid. You remember those days?
Oh, sure. Yeah. I
mean, oh my God, you're paying me only 35% on this business? All of a sudden, a lot of the independents are now doing the 1099 brokerage. Yep. The broker is coming in and getting his, whatever that number is, 70, 80, whatever the number is, and he's his own boss, but he's got to answer to compliance, he's got to answer to, And he also has to do a lot of work to make sure that he's buying the right product for his client and working with an honorable client. When you look at all the rules that FINRA and everybody else has, the most important thing is to make sure you have compliance, because the world has also changed in that area a lot. So the issues are the entrepreneur broker, I believe, is coming back into the industry. And if you're all out there and you're owning brokerage firms and you're working with brokers, isn't it about time to start looking at these guys as entrepreneurs instead of people who are just pounding out a commission? So an entire, I remember we used to argue about the corporate finance department in New York. Every time you did a deal, they took more of it than the broker took. That should not be the case. Now, the smaller, more entrepreneurial brokerage firm ought to get a much bigger piece of the deal and use the expertise of their clearing firm to get the flow and the information and also the sales. I'm yelling at Steve a little about we need to be salesmen as well. Not just salesmen to get an account, but salesmen to help you make sales out of your companies. So that's
right. Well, that's our answer to why COR Clearing. So at this point, we really want to just throw it open. We'd like some questions, your thoughts, ideas. We can be sponges, or we can just be responses.
Can't hear you. Can somebody give him a mic?
It's reasonable to assume you two gentlemen had a great deal of success in your careers. What is it about COR that's keeping you in the game at this stage of your career? And where do you see the company in about 5 years from now?
I only heard part of that.
No, here, I think, here, you got to
How's that? Is that better?
Thank you.
give it.
It's reasonable to assume both you gentlemen have had a good deal of success in your careers. What is it about COR that's keeping you in the game here today? And where do you see the company in about 5 years?
Okay.
I mean, I'll answer, you know, St. Cloud invested some money in COR, and I think in the long run we're prepared to invest more. We believe this is an industry which, with the right management and the right marketing and ability to present, is going to grow dramatically. Now, where it is in 5 years, you know, I mean, we're a private equity fund. We make 5 to 7 year commitments. I can't tell you. I know I would hope, you know, I would hope it'd be a 5 times bigger firm, and the equity and the value of the company would be worth a lot of money. But you just look around and see what's happening. Look what's happening in the brokerage industry. You're getting a lot of big firms closing and a lot of smaller firms opening. I mean, to me, that's sort of a trend. If I was a broker today and I was working at Merrill Lynch or wherever, why the hell would I want to work there anymore? I'd just as well go out and start my own firm and bring in 10 or 20 or 30 or 40 guys, operate it profitably, make money, create opportunities, and not have the bureaucratic bigger guy standing there taking every time I did a trade, taking more out of my pocket than he's worth. So that's just my answer. I can't tell you where it'll be in 5 or 10 years, though.
Well, my interest and association with COR is a little bit different. And that was, you know, I retired from Pershing 6 years ago. And the reason why I retired wasn't terribly complicated. I really wasn't ready to be retired. But we had been acquired by the Bank of New York and BNY Mellon, pretty large organization. And after 2 or 3 years, it became pretty apparent to me that at the senior management meetings, it was all about BNY Mellon. It was all about their business. It was all about their profits. I can remember telling Tom Rainey, who at the time was chairman, that, you know, I've been here for 12 months, once a month, for 4 hours, I come into town, listen to you guys talk, and in 12 months, which is 48 hours of listening to y'all, you haven't used the word customer once. I come from a world where the customer drives the business. The customer is the business, and it's all dependent upon relationships. So, and then I looked across the spectrum, and I looked at National Financial, I looked at what happened to Bear, I looked at TD and a few others, and I recognized that, you know, not that it's a bad model if you're sitting on their side of the table, but it really wasn't my model. It really wasn't what I believed in. It was philosophically different than I imagined a culture that had a mission of providing top quality service and helping to build a business. So I retired. I then spent about 6-7 months. I made some trips out to Chicago, to people like Mesereau, went a little further south to RBC and so forth, and talked to them about where they were going, what they were going to do. And what I walked away with was the big guys, the gorillas, were so far away from the real world that they weren't going to grow organically, they weren't going to provide any kind of resources to the small regional broker-dealer, and they're not. On the other side of the table, the smaller regional clearing firms, none of them are independent. All of them had clearing as a filler, a way to reduce their operating expenses. They had another priority. They had another owner, if you will. And I saw no one out there who wanted to be clearing, that wanted to provide fundamental, basic clearing and provide services and products to help the regional small broker-dealer grow. That's why COR became of interest to me. The other part of that story is Eric Anderson introduced me to Steve. They dragged me off a golf course about 13 months ago. Eric lied to me. He said he'd have a 15-minute conversation with Steve, and I will have done what he promised Steve, I guess. So 3.5 hours later, what I recognized, that here was a guy that was, you know, he's pretty smart, good looking, well, by and large good looking, but the truth of the matter is, well, hey.
You buy good-looking guys lunch.
Yeah, but they're a dime a dozen.
Never offered me lunch.
Yeah, well, what can I tell you? That's what you get for being a competitor.
Yeah.
But seriously, but what I heard from Steve Sugarman was a mission. I heard a plan. And what really got me excited after 3.5 hours, you can hear the passion, the energy, that, you know, if I had the right people and the right resources, I can make it happen. And that got me excited. It brought me back 40 years, the days when we first acquired Pershing. And then I really got sucked in when I was told that Marshall Geller was going to be on the board. And it's, oh, wow. Say a lot of things about Marshall, but the Bear model, what I was always envy of and how they beat me in the marketplace, not all the time, but enough times, is they knew how to deliver the resources, the products and the services above clearing, basic clearing. They understood how to package it and deliver it to their correspondents. And that was all Marshall. So I was excited about, well, mainly, well, you were a driver.
There was a bunch of guys.
Maybe he was in a back seat, but
Okay. So
you didn't say that when we were competing for business.
yeah, let me,
yeah.
if I may, let me just say a couple of things that I think. I left Bear in 1990, and I started a private equity fund called, in iterations, but in 2000, it became known as St. Cloud Capital. Our whole mission was to invest in companies under the radar screen of Wall Street and the banks. And what happened, we've done 55 deals in the last 10 years or so. What I'm saying here is, I'm not saying COR is under the radar screen, but our whole focus is on companies like this that have a very clear vision of growing into being big boys someday, but with a passionate management that knows what their client base really needs. And I will tell you, Steve has proven that to us over and over again. They want to build a company. They don't want to build a company that's I don't think they want to build a Fidelity, and I don't think anybody could build a Fidelity in this atmosphere. But can you imagine, you talk about niches in the market, this is a classic niche from an investor point of view, from St. Cloud's point of view. The market is sort of diminishing. The competitors in the smaller space are not doing well, and the big guys are becoming more and more pricey and prohibitive. I mean, they don't want to deal in the areas that a lot of brokers are dealing in. So here was a very, very simple vision of, here's the money because you see where the opportunity is. And in our particular case, we also see a major revision and growth coming back into the retail brokerage business. And I know that's hard for a lot of people to buy, but it's going to happen. Distribution is the key to building this entrepreneurial spirit back in this country. You have to be able to distribute product. And you have to distribute product by selling product. And I don't mean the slamming and selling dollar stock. I don't mean that. I'm talking about taking product like some of the stuff you saw here, or my friend Harvey Eisen has a company, taking product that makes sense and selling it to people. And that's why, we're invested. And then I have one saying I've used all my life, and that's something that has been very important to me. I have a saying that says, I've never met a rich pessimist. And if you think about that, this country and this business and whatever we talk was built on optimism. People have to be optimistic to make money. Yeah, you'll hear the story about, oh, what's the guy's name that shorted for Paulson? Paulson shorted the mortgage bonds and made $1 trillion. But if you look at the history of America and the history of business, for every one Paulson, there were millions of guys who were optimistic and put money in companies, started Google, started this, started Bear Stearns, 50 years ago or whatever. So I've never met a rich pessimist, and I believe that this is the turning point in the retail and small brokerage business, and a clearing firm is where I'd like to have our money, which we do. So that's the way I feel about this business.
Marshall?
And the second part of your question is not unlike Marshall. I wish my crystal ball were clearer than his, but I'm not sure where the firm will be in 5 years. I think our expectation from a planning point of view is that we'll more than likely double and triple within 3. And then it's a matter of being poised and being able to seize opportunities as they come along. And no one can tell you when those will happen. You have to be capable and ready.
Next question,
Yeah.
go back there.
Yeah, Marshall,
Yeah.
this is Harry Gruber. I just wanted to comment, I think you're on the right track with this a future opportunity for COR Clearing. The large investment banks will only really bring in retail when their institutional says they're in, and because they don't really know how to get comfortable otherwise. But I think good investment